Thanks for joining us on Countdown. You're watching Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah, and with me is Agam Vakil, co-anchor for the day. Let's take stock of what the markets are doing, and then get in Nikunj Johri to speak about this news that is flashing on your screen as well. Need to mark, though, that the markets are trading very, very flat for most part of the trading day today, and right now is no different. The Sensex and the Nifty flat, the Nifty Bank 2 trading very, very flat. So absolutely flat day of trade for almost all of the key benchmark indices. But some news bits coming in. The banking sector is saying that about 35 odd branches, foreign branches of public sector banks, the government has asked those branches to be shut down. Nikunj Johri, who sent us this piece of news about 10 minutes ago, joins us right now for a quick perspective here. Nikunj, what are you learning? The flashes tell us that it's about 35 banks or 35 branches of PSBs, without getting into what's the number of PSBs and which are these PSBs. What are you learning?
Right. So the operations of PSBs overseas, the 35 overseas branches of public sector banks will be consolidated, and 69 operations that have been identified will also be consolidated. This would include bank branches, joint ventures that banks have, their subsidiaries, remittance centers. These will be consolidated. That's what the banking secretary has tweeted. The idea behind this is that non-viable operations in overseas markets will be closed for cost efficiency and synergies. Operations in the same geography would be consolidated. And another important point, that consolidation, public sector banks would also consolidate their equity stake in joint ventures in which multiple public sector banks are partners.
Okay, so Nikunj, this is not essentially a fallout necessarily of the PNB fraud case. The branches are not shutting down. Do you economies of scale or otherwise? There is a consolidation process that is on.
Right.
Okay.
So the branches would be consolidated and not shut. That's what the understanding is from what the banking secretary, Mr. Rajiv Kumar, has tweeted.
Okay, fair call. We can probably get the tweet as well on the screen for the benefit of our viewers. The wall should have the tweet too. Okay, the screen does have the tweet, and he's speaking about PSBs to consolidate 35 overseas operations without reflecting international presence of impacting international presence of PSBs in these countries. Okay, fair call. Thanks a lot for that, Nikunj. Thanks for putting that into perspective. It's moved towards cost efficiencies and synergies in the overseas market, and nothing beyond that. Seems to be 16 operations identified for further examination as well. Nevertheless, that's that. But the markets, by and large, Agam, trading very flat, though the broader markets are reasonably active.
Right. So I was actually looking at whether or not there is some sort of reaction when it comes to the public sector index, that is the PSU banking index, and actually, as a matter of fact, it's just fallen after the news has come. So we really haven't seen too much of a reaction there. But when it comes to the broader markets, let me just pull up the advanced decline ratio on the National Stock Exchange and take a look at what's going on there. And again, not too much change. So consolidation across when it comes to the equity market, starting off with the advanced decline ratio where there's no change, though advances declines by just a small margin. And even in the broader markets, that is the mid cap and the small cap indices, I'm tracking traction in something like an IDBI bank, which has, as a matter of fact, moved from strength to strength. At least on an intraday basis, there you have it. It's trading near days highs, and this is contrary to its other public sector banking peers. We also have some strength coming in something like Dalmia Bharat. This is, of course, a fallout of, the CLSA note coming on upgrading the stock. In fact, they've initiated the stock and they put in a price target which is 30% from current market levels. We're looking at good gains in something like a Future Lifestyle, which is building on the gains that we've seen in 2018 as well as 2017. Ashoka Bilcon, of course, also up and about. Gains coming in Firstsoft Solutions, ITI, as well as Edelweiss Financial now picking up steam after the significant weakness that we saw in the months of January and February. Let's also take a look at some losers in the broader markets. And Indian Bank, of course, from the banking space is losing out. It's down by as much as 4.2%. Rajesh Exports also stands out in trade. KEI Industries, that's down 4%. Remember, a lot of veteran investors are invested in this particular cement company. They're looking at some amount of weakness here. Torrent Pharma, Videocon Industries and Vijaya Bank, among others, which are losing out to a certain extent in today's day of trade. So on the whole, it's fairly evenly poised when it comes to markets. But and of course, consolidation continues, and while cash turnovers remain average, we have seen a little bit of an uptick when it comes to the futures and options turnovers. So that's mostly it when it comes to highlights in at least today's trading session. There's nothing actually much to speak for, Neeraj.
Let's get in our market voice. Dipan Mehta, member of Bombay Stock Exchange, joins us right now on the show with his thoughts. Dipan, good afternoon. Thanks so much for joining us and speaking to us on Bloomberg Quint. Pleasure having you.
Thanks for having me. Yeah.
No, pleasure having you. What are you doing, Dipan? I mean, for yourself and for your clients, are you selectively taking large bets at will right now, or is the mood still of waiting for the dust to settle and invest either after a particular time correction has happened or a particular price correction has happened?
No, I think we are nibbling into the market, and every time we are seeing weakness either market wide or in the stocks in which we would like to increase our positions for ourselves or our clients, then we are buying into those companies at appropriate price points, keeping enough fodder in place, enough cash on the portfolios to buy even further if the markets correct. At this point of time, it's very difficult to make a call on which way the market could turn, etc. I would think at an inflection point, and from these levels it could go up or go down, and based on all the various factors, the pull and push factors, it's becoming very difficult to assess which way the trend, medium-term trend of the market will be. So it's best to just reduce the trading investment and look at doing it slightly on a more measured and a cautious basis.
So, Dipan, good afternoon. So what areas would you be nibbling into, if at all? Where are the opportunities that you see in this market?
See, I think we've seen a decent correction, and the blue chips which we missed out earlier in the bull market for the last 4 or 5 years or so, concept stocks which have done exceedingly well, great track record, are in a sweet spot or have very aggressive managements. Those are the companies that we are looking at buying. Run-of-the-mill stocks within sectors is not something, but something you missed out on. Like for example, it could be a Titan Industries, which has been a spectacular performer with usual disclosure that we and our clients may be invested. It could be an HDFC Bank in the financial service space, or a Bajaj Finance, or a Maruti, or an Eicher Motors. Wherever we feel that the companies are in a secular growth mode, and valuations in the past have been on the higher side for because of their popularity and because of many investors having there in the portfolio, there's scarcity value as well over there. But now these companies also have corrected anywhere from 10 to 15%, 20% or so. So some amount of margins of safety has come in, and those are the companies that we are really targeting to acquire slightly higher position. Because when the market turns and this bull market starts all over again, I think those companies, the blue chip companies, the bluest of blue chip companies, will be the first off the block. And corrections like these are the best time to add such position, because when these stocks are flying, there's always a concern about valuation, and sometimes it's psychological buying at such elevated levels. So that's the strategy for the present.
Right, and speaking of Eicher Motors, we've had the Eicher Motor commercial vehicles volumes numbers coming in as well. We're looking at an uptick of around 25% now. So, this is the Volvo Eicher JV sales coming in at about 25% growth on a year-on-year basis at, a little less than 6,900 units as against a little less than 5,500 units in the comparable year in the same month. That said, Dipan, you did speak about the possibility of Eicher Motors and of offering an opportunity. But, talking about the auto sector in general, I don't know how you're seeing valuations for something like a Maruti or for that matter Tata Motors. What is your call on these heavyweights now? I know that all of them have gone through their own set of challenges, but what would you prefer?
See, first of all, Tata Motors and Maruti are like chalk and cheese. There's a great deal of difference between the two companies. Maruti is a direct play on rising domestic consumption, on premiumization taking place within the auto industry, and a whole host of other trends, macro and micro, which tend to benefit Maruti, right from the 7th pay commission to further push into rural because of better agricultural trends. And there are many, many positive factors going for Maruti. And Tata Motors, on the other hand, is just basically JLR and a small Indian operation, which where there's a high degree of volatility in the earnings as far as the Indian operations are concerned. And with JLR, one just doesn't get a handle on what the production and sales numbers will be. Sitting over here in India, we can't judge or estimate what sales will be there in China or US or Europe for that matter. So Tata Motors is a complete avoid. But Maruti is something, which almost we are suggesting that almost all investors must have it as part of their core holdings, given the track record and the future potential. So that's as far as these two companies are concerned.
All right, Dipan, I'm going to implore you just a little more on the auto sector, considering we've had a lot of these volumes numbers coming in today's day of trade, and I do want to address the two-wheeler space as well. We've seen a very good earnings, very good volumes numbers coming in from something like a Bajaj Auto. We're still awaiting numbers from TVS Motor Company and Hero MotoCorp. If you discount what's happened in the last month, however, what you also consider what's happened in the last few months, are you looking at some trends that are changing with respect to volumes and thereby the earnings for the prospects of these two-wheeler companies? And what's your view here with respect to the anticipated pickup in demand when it comes to two-wheelers?
See, I think that two-wheelers also should do well broadly, and all the four companies operating in it should do exceedingly well. But we have to be selective over here, and the top pick remains Eicher Motors because of all the various factors and position of the company and the product per se, and the kind of growth momentum which they have generated. Bajaj Auto certainly has come out with good production sales figures, but there's a degree of volatility in their earnings. And it's a kind of a single product company. I mean, they focus mainly on the motorcycles. And within the two-wheeler industry, what we have noticed is that different segments also come into play and tend to outperform or underperform from time to time. So it was scooters which has done extremely well last 2-3 years, and then we saw even premium bikes doing well as the case with Royal Enfield. Bajaj Auto, to that extent, their business model is slightly more risky as compared to say a TVS Motors or a Hero MotoCorp, because the export markets also, there's a degree of volatility over there as well, because the countries they are exporting to are either the frontier nations or emerging markets, and those economies have their own set of challenges, from currency to internal regulations to political stability and so on and so forth. So while Bajaj Auto may do well, you may have a trading bounce in it, we're not completely convinced of the long-term prospects when you compare it with a TVS Motor or a Eicher Motor. So I would say that go for two-wheelers, but definitely be selective, and the two companies which come to mind in that order are Eicher and TVS. Again, both companies we and our clients are invested.
Right, Dipan. So then let me come down to the other sector which is buzzing in trade, and that is the public sector banking space. I'm not going to talk about the other public sectors. However, I do want your take on something like an SBI, or for that matter, as it emerges, IDBI Bank has caught the fancy of some of the investors out there. What's your call on these two stocks right now?
Both are a complete avoid. And as I said, in a correction like this, you want to buy quality. When the bull market will start again, at whichever point it will, the first of the block within the banking space will be the likes of say an IndusInd Bank or a Kotak Bank or HDFC or Yes Bank, RBL. These are the companies which will really start performing exceedingly well as institutional money starts flowing in again. And we have the consistency of earnings over there, the visibility of earnings, management comfort. To an extent, corporate governance standards also are extremely high, and that focus on retail is what is driving the companies I mentioned just now. When it comes to an SBI, I mean, who wants to wake up with another quarter of a loss? I mean, there's just too much of uncertainty as far as these PSU banks are concerned and their recognition of NPAs and what will go into NCLT and how much they will get is just far too much of confusion and opaqueness as far as the numbers and performance going forward of these companies are concerned. By opaque, I mean we cannot estimate what their earnings will be or what the earning capacity is. And in any case, the PSU banks are kind of losing market share at the expense of private sector banks, and they have not been consistent performers. Track record has been pretty, I would say volatile to say the least. So I would completely avoid both these companies. I know IDBI Bank is maybe up for privatization, but privatization by itself will not solve IDBI's problem. It has to get the right kind of people to manage the bank and then turn it around and get it retail focused. And there are many challenges. The way HDFC and some of the top 4-5 banks operate would make you appear that banking is an easy industry, but it is not. I mean, look at the way Ujjivan and Equitas are struggling after they've converted themselves to a bank. So, getting the banking equation or the banking business model right is very tough and depends a lot upon the top management and their vision and their execution. So just because a company is getting privatized or just because it's a PSU doesn't mean that they will succeed in the banking race.
But I think that's a fairly important point as well, and I think Dipan citing the right examples too. Dipan, such a pleasure having you today as always. Thanks so much for taking the time out, and happy Holi and have a great weekend. That's Dipan Mehta with his thoughts on markets. Now let's shift focus to specific companies. KEI Industries is stock in focus. While it's given stellar returns, etc., I think a couple of notes and dealer checks suggested that the management commentary in the recent past has been fairly positive. Let's talk about whether 2018 can be as good a year as the last few have been, because KEI frankly has been on a roll since about 2014 odd, when business really picked up leaps and bounds. Anil Gupta, he's the CMD of KEI Industries, joins us right now on the show. Mr. Gupta, good having you. Thanks so much for joining in. Don't think we got a chance to speak post your quarterly numbers. How did the 9-month operation, or how are the 9-month results look like thus far, and how confident or bullish are you about business going ahead?
In the last 9 months, the 3 quarters of 17-18, company has achieved a growth of around 24% in the top line compared to the previous year in the same period, and we expect the similar growth on overall basis in the current financial year. We are quite positive about next year growth path also as well. We have already given a guidance of 15 to 17% growth in the ensuing year as well on a CAGR basis. Because of the strong order book position and the product positioning in the market, we have strongly grown in the dealer segment where we are achieving a strong growth for sales of our wires and cables from our distribution and dealer network, pan India.
So that's good to know. Mr. Gupta, the 3 businesses, cable division, stainless steel wire division, capacity utilization levels close to 90%. Typically, companies start thinking about capacity expansion or capex when capacity utilization does reach those levels. In the house flexible wiring division, though, it's way below that. How do the next 12 months shape up? Would you expand capacity into the cable or the steel wire division in a meaningful way over the next 12 to 18 odd months?
We are already in the process of expanding our capacity in the cable division. A new factory is coming up in Bhiwadi, Rajasthan, in Pathredi, which is likely to commence commercial production by end of April or early May. So that will enhance our capacity of low tension power cables in the coming financial year. So far as house wire and flexibles, we have the capacity available for at least next 1 year, and we will definitely will be thinking about the growth in that capacity as well in the next year as well. So far as stainless steel wire is concerned, that is a non-core business for us, and hence the capacities are stagnant. although the division is doing well.
Right, Mr. Gupta, can you give us an update on the current position of your order book and the kind of traction that you expect to build over, say, the next 3 to 4 quarters?
At the moment, our order book position is around 2,700 crore, out of which 1,900 crore is EPC plus substations, and balance is the order booking is of cables. And our guidance is that we will grow in the next 3 to 4 quarters by 15 to 17%.
Right, and so where are you targeting these orders to come from? Is there a specific area in here?
No, it is from our existing customers and existing territories.
Okay, and how much top-line growth can we expect in your EHV cable segment, since the company intends to triple the revenue from the segment within a span of 2 years? Subsequently, can we also expect some changes in margins?
EHV cable should grow by 60-65% in the next financial year because of the low base in this financial year.
Okay. I'm guessing, Mr. Gupta, that you are not in need of any kind of funds. Just wondering what the debt equity currently stands at.
Debt equity is around 1.5 at the moment.
Okay. Any plans to reduce that, sir?
No, yeah, it will get reduced by internal profits.
So you plan to take it to what? 1:1?
Yeah, our plan is to take it to 1:1.
In about what, 12 to 18 odd months?
In around 2 years' time.
In about 2 years.
And in these 2 years, Mr. Gupta, do you think that debt mix can change when it comes to the different rates of interest that you're paying in terms of short term and long term?
Yeah, I think so.
Towards would it be towards long term then, that which would, I'm assuming, command a lower interest rate?
Mostly our debt is towards working capital.
Okay, Mr. Gupta, wish you all the best. Thank you so much for taking the time out and joining us and giving us that perspective.
Thank you.
That's KEI Industries, speaking about the numbers and the outlook ahead. Okay, what else? In moments from now, of course, we'll talk about the big story at hand. Fortis spoke to Bloomberg Quint earlier, and we'll take stock of the conversation that happened and what are the key takeaways out of that conversation too. While we just wait for that to happen, bring up Dalmia Bharat. It's a stock that's now the second highest gainer on the BSE 500 and Nifty 500, 2781, 5.6%. The CLSA node, needless to say, doing wonders for Dalmia Bharat in the session today. I think their target price was substantially higher than the current market price. And CLSA, of course, goes ahead and says at 3,500 seems to be a target that they believe the stock can reach over a period of the next 12 to 18 months. It's a high risk reward buy, but they believe that with all that's happening, it's a growth obsessed concrete business, and the focus on growth and industry leading profitability could lead the stock to further highs over the course of the next 12 months. So do watch out for Dalmia Bharat individually. However, as I said, Fortis, it's putting up a brave front. The company's CEO, Bhavdeep Singh, told Bloomberg Quint that the Singh brothers have given an assurance to the company that they will return the money taken from Fortis. Darshan, who spoke to the management, joins in right now with the key takeaways from the interaction. Darshan, what stood out?
Yeah, so basically what they're saying is, they tried to put up a brave face. Obviously, they were giving their defense. The important thing that they said, first of all, was that, despite whatever the auditor said, that the accounts were signed by the audit committee, and that is why, they were able to release the results. So that was the first takeaway. And the company has formed an investigation team to look into the audit team claims. So basically, it was the intercorporate deposits. They're talking about the legal issues that are there. So several of these issues, the legal team will look into the face. Apart from it, they're saying that, the big problem was this 473 crore that was given out to companies which at one point of time were not subsidiaries, but then they become subsidiary. So they're working on a repayment plan, and they say that they believe that, by the end of the first quarter, this money will come in. Even this and, the other, money given to the vendors that was there, close to 58 crores. So they're pretty confident that the money will come in back into the company. The next thing that they said that, the Singh brothers had given assurance in terms of a return of the fund. So by the first quarter, they expect money to come in into the company. The other thing, an important thing that we need to talk about is the fact that, they are confirming that, they are in talks with a lot of company. Right now, there's no promoter of Fortis. So a lot of companies have shown interest in acquiring Fortis. In an interview to Bloomberg, they had said that 3 to 4 companies have already shown interest. So that is something that, it was important that the management pointed out. In terms of the RHT stake sale, it says it's a good fundamental bet because, the amount of money that they keep giving to RHT in terms of service fees and all, that will come down drastically. And they have the funds to actually, and at this point of time, they are amply liquid enough to actually go in for this acquisition. This, they say, if they do this RHT acquisition, it will make Fortis a much more attractive assets for investors to come in. And even when they're looking for debt or equity partners to fund the RHT stake, they have significant amount of interest that is coming in. So basically, a lot of stuff spoken about the management in terms of what the company has. Nothing much on the numbers as such, but clearly they believe that they will be able to guide Fortis to better days. They believe money will come back. They believe once RHT happens, it will be a much more attractive asset. M&A talk. So it's all across the board. The management spoke to us.
The fine thing about Fortis is, it may not be funny, but I'm just saying that when I look at the Bloomberg consensus, we have about 87% buy ratings on Fortis Healthcare. This is, of course, something that Darshan highlighted, a few days ago when it comes to Fortis Healthcare, that, a lot of these things, a lot of these positives may not have been factored in. But that said, we're looking at 0 sells when it comes to Fortis Healthcare and holds at around 2 of the 15, which is, well, a relatively positive stance. But when it comes to its return potential too, where we're looking at a 24% return potential from current market levels. Now, that's saying something.
We've done this initially also. So basically, I think the M&A overhang will be there because, the management has confirmed that, 3 to 4 suitors are there. Financially, I think the third quarter numbers were bad. The second quarter numbers were decent enough, so they're not doing bad financially. And if an M&A happens, if the Singh brothers, which was the biggest concern by the way recently, if they are out, so that I think that's what the consensus analysts have been speaking about, and the M&A overhang will be there. So if that happens, that will be a big boost for Fortis going ahead.
Right. Well, let's wait and watch. Darshan, thanks so much for putting that into perspective. Darshan and Yatin there and Harsha, of course, had this exclusive chat with the Fortis management post their con call too. And the story, of course, will be up on www.bloombergquint.com, our website. So at some point of time in the day, you'll get that story about Fortis on our website as well. So do visit that for more information, more detailed information, if you will. Okay. Let's get in our market voices in. Jay Bala, Chief Market Technician at cashthechaos.com, joins us right now from the Singapore studios. Jay, good having you. Thanks much for joining in. Tell us, Jay, how would you trade Fortis if you were a compulsive trader? Of course, it's in the ban, so you arguably can't really take, weekly positions or monthly positions. Having said that, if the choice was available for you to trade Fortis, would you do that?
I would definitely sell it. Just because a marquee investor has got in doesn't mean the bottom is in. What the market is doing at this point of time is probably very close to a short-term support, an extreme short-term support to be more precise. So any bounce from here on is a selling opportunity, in my opinion. I won't be surprised in the slightly medium term. If the stock were to drop to double digits, somewhere below, somewhere close to in the 90s. But what I said earlier, there's going to be a slight bounce from the current levels, and I don't think the stock has seen the final lows in the medium term.
Right, Jay.
Okay. So, I just wanted to have a follow-up with Anand on this, Agam, if you don't mind, because I think Anand Tandon is also with us. Do we have Anand Tandon? Okay, we do have Anand Tandon. Anand, good afternoon. Thanks for joining in. Just want to stick to Fortis once before we move ahead. It is now a sector, Anand, and we'll come to the market views in a bit, Anand, but just talking about this healthcare space, Fortis, etc. It's now a sector which has got fair bit of representation. There are 4 or 5 maybe listed entities in the hospital space, some small, some large. where does Fortis fit in within all of this? There is a controversy which is on, which will probably die at some point of time. The clarifications from the CEO today, they put up a brave face as well. They've said that the Singh brothers have told them that each and every penny taken will be returned to the company as well. Does it fit in the investment scheme of things? Or do you believe there are other opportunities in the healthcare space available, or are you just shying away from this pocket completely?
So actually you can only buy so first of all, we have to understand that I think the business itself is fairly robust, right? There is nothing wrong with the hospital business. If in fact at all you have to look at it on a long-term point of view, the next 4 or 5 years, you're going to see a rapid increase in revenues for most hospitals. And the listed ones obviously are the bigger ones among them. So clearly the business itself is not a problem. The fact that there has been some money siphoned out is history. I mean, on that basis, you should never buy a bank, for example. You should never buy one anyway, but that aside. The fact of the matter is that there is an asset. That asset is of a high quality asset, and it has a current business which continues to run. So to look at it from the past financials, or to look at it from the point of view that there has been some siphoning off, is perhaps not being fair to the asset. Now, whether the asset is undervalued or not is the main issue, and I think clearly it was till a few days back. Now more or less it is catching up with the rest of the market. But even then, there may be at least a 15% play in that. So from that point of view, I think it remains an attractive asset, and people who bought it, let's say $20 lower, will certainly make that pop. If there is a strategic investor, you'll probably make a little more, because there will be a certain amount of euphoria that going forward, at least the balance sheet will get cleaner. So the asset value itself is somewhat depressed, and I think therefore it makes a good case for investing in it.
Right, so mixed views coming in from Fortis Healthcare, from our experts, different viewpoints on technical and fundamental basis. But Jay, I'll come back to you. Tell us, what is your view on the Nifty now? Do you expect to see more consolidation coming in?
Yeah, the markets have been slightly weak, and as I pointed out last time, the tussle is between which is going to win. The U.S. market's going to pull the rest of the world along with it, or it's the the European markets that's put in a bottom, and that's going to pull the rest of the world with it. But coming from the last 2 days price action, it looks like it's the U.S. markets that's going to drag the rest of the world down, and from the Indian market perspective, the 10,660 odds, 630 odds highs it made, last 2 days ago. That's going to be an important resistance, and the more important thing is the structure on the lower side looks slightly incomplete. So we would like to see a washout low below the 10,278 low that it made in February. If the market were to go below that, it will trap a few medium-term bears, and it will be a perfect setup for the markets to scale record highs. Once the markets can go somewhere below 10,278, we have a price projection somewhere close to 10,170. Maybe a 20% probability if the sell-off is much more severe, then it'll be somewhere close to 9,800. But that's only a 20% probability. I think the 10,100 and change levels will hold.
And what about your picks right now? You like Asian Paints and Heritage Foods?
Yeah, see, basically, the price action is saying that the markets are, trying to find a place to hide, and given that information that's coming out of the market, there is positive signs emerging out of the FMCG space. Asian Paints, Colgate-Palmolive, Britannia, they're all seeing a flow of money into it, and the technical setup for Asian Paints is really neat, and I think any drop from here is going to be very limited here, and it's coming to a very ideal support zone. And I think if it were to turn around from here, I think it's going to take out the record highs and probably go to somewhere close to 1350. And as far as Heritage Food goes, I had commented in December that stocks which have done so well are going to see a correction, and that correction will be an ideal entry point. And most of the dairy names have been doing well, and Heritage Foods is a related name within that sector, and it's had a phenomenal run from 2014 all the way to 850, and from there it's got a very important chop. And although it looks erratic for the normal eye, it's a perfect correction. And I think if there's the probability that it has put in a low at today's low is a very high probability, given that I'm expecting this stock to kick off its next leg of the up move and take out the record highs and go somewhere close to 1100 plus.
Right. Let's also welcome in Kunal Saraugi, the Chief Executive Officer and Editor at Equity Rush, who joins us on the show. Good afternoon, Kunal. Tell us, what is your view on the Nifty and what levels are you keeping in mind now?
Well, I think Nifty continues to be under pressure, and what we've seen is that there is this consolidation on in the Nifty. I see the Nifty continue to trade in a range between 10,600 and 10,300 for the next few sessions before it finally snaps out of it either way. There is a heightened possibility that you might see a drop back to 10,300 levels over the next week. So I think bears would do well to hold on to the short positions with a stop loss in the region of 10,550 to 10,600 for a first target of about 10,350 to 10,300. So I think the overall direction continues to be mildly bearish, but we are largely in a range between those two very pivotal levels.
Well, you also have two buys. You like Wockhardt and NIT Technologies. Can you take us through those calls?
Well, both defensives, and I think if the markets were to slide some more, I think these are the stocks that would hold out. Wockhardt, to my mind, is a very clear buy. It's corrected quite sharply from its recent highs and now is beginning to establish a base for itself. Can be picked up at the current levels for a target of about 860 and with a stop loss in the region of 810. The other stock I like is NIT, and I've been liking the stock for a while now. It's broken out afresh today. I see the stock getting to 900 levels. One should put a stop loss at 845 and go long on NIT Tech as well.
Sure. So those are views coming in from Kunal Saraugi. Mr. Tandon, I'd like to shift this conversation to the cement space right now. You've had some amount of developments with respect to ACC Ambuja, but you keep that aside. We're also looking at a little bit of a pickup when it comes to the share prices for a lot of the other companies. Anything that you like in this area, and what is your overall view when it comes to this sector?
The sector has flattened to deceive for a long time. I mean, the analysts have been estimating that volume growth will pick up. It hasn't yet done so in a meaningful manner. I guess this year may be the real test year because you would expect that with the kind of focus on infrastructure execution that is likely to happen this year, you will probably get at least some reasonable cement volume growth. And if that were to happen, then I think prices can sustain and margins can improve. So overall, I think it's still a sector that you want to be in, but you may have to still have a 18-month view on it at least. Most of the frontline companies, to my mind, look somewhat expensive. Barring a case like, for example, Dalmia Bharat, etc., which has managed to grow its EBITDA very well because of the increasing capacity and their consolidation that has been going on. But there are the mid-cap cement space offers a little better opportunity if you assume that the volume growth and will happen this year and prices will sustain, because that's where the delta is likely to be higher.
Anand, this GDP numbers that came out showed construction at 24-quarter highs. We were speaking to Anarock this morning, and they were saying that absorption, which is essentially sales in the first 2 months of 2018 on flats in almost all pockets of the country have been phenomenal. So buyers are actually now returning to the market, and there are more new launches happening in the first 2 months of the calendar than we've seen in the past couple of years. Does this also set the stage for a potential or a possible cement demand uptick, something that has, in a manner of speaking, remained elusive in the recent past?
Well, I think cement, where it actually gets consumed, has always been a bit of an issue. I think the road sector, for example, in my view, will actually consume a lot more than perhaps just some residential construction, especially if more of the roads are actually made of concrete. So, you may have to, but every little bit helps, right? I mean, obviously, construction of residences and offices has been rather lackadaisical, and the inventory continues to remain reasonably high. The immediate effect is unlikely to translate into cement demand because, as I said, the inventory is already high and there is already some large amount of stock that is waiting to be sold. So first that inventory has to be cleared before you can actually translate that into cement demand. I think the infrastructure spend overall, not necessarily in housing, is what is going to drive demand, and that's where the hopes are.
Okay. You know what else is doing well? I think mid-cap IT companies like NIT Tech and First Source are having a great run today. Edelweiss is making a bit of a comeback in this session, and well, OMCs by and large have been doing rather okay for themselves. Anand, do mid-cap IT valuations now start to bother, or is the tailwind strong enough to take this, take all the boats within this ocean or the pond higher?
It depends on whether or not the estimates in terms of the revenue growth is going to be beaten. Right now, of course, whatever you can see as visible volume growth is actually being fully priced in. And as you mentioned, the mid-cap IT is probably reasonably, perhaps a little more expensive in some cases than even the large cap ones. Obviously, you would have to give them the credit that, that because they're probably growing a little faster as well. But really speaking, the bet is on whether or not the US market is going to do well, and will the demand pick up, and therefore consequently will the revenue growth that is currently being projected get beaten on the upside. I think the jury is out on that. I don't think that we have seen enough evidence to show that there's going to be a beat. But given the fact that the rest of the market is looking quite weak, clearly it's one of the places that you want to hide in, because it also has the tailwinds of the rupee now, and the fact that you will have less of issues in terms of any hiccups that may happen, because most of them are under leverage and so on. One of the least owned sectors, so you're not likely to see too much selling as well. All in all, I think IT remains a good place to be hiding. How much upside you will get, of course, will depend on, as I said, what the international market growth looks like.
Right, Mr. Tandon, the other sector that I did want to address was the consumption sector. What we've started seeing over the earnings that we saw was a substantial jump in the volumes. Of course, partially the reason behind that was the low base that demonetization provided. But there is suggestion that there is a genuine uptick in demand as well. Are you of the same opinion as well? And in such a case, what would you pick when it comes to this sector?
Consumption has been the one leg on which the market has been running away. So most of the stocks that you see in the sector have actually done very well, much more than perhaps their earnings will justify. There are a few issues in terms of what we are seeing between the macro and the micro. As you mentioned, it appears that there is reasonable uptick. And yet, if you see that the consumption demand is supposed to be coming from rural India, we also have a lot of news about farm distress and so on, which is a little difficult to square. But that said, there is at least the companies are reporting very robust growth, and given the kind of numbers that are likely to be thrown by the government into the rural areas, I think that that demand can only go up. So I think rural aid-based companies on consumption, whether it is FMCG like Dabur, etc., or perhaps even white goods, especially if the forecast for a bad summer is likely to be correct, then some of the white goods manufacturers may also benefit because as electricity gets available more and more into has a deeper penetration. I think many of the white goods, even televisions, refrigerators, etc., will get sold even more. So I think that consumption will remain a theme even for the current year. And you only have to look at a bad day where valuations are a little cheaper to get into any of the stocks.
Okay. Anand, one final thought. We're just about to speak to a company engaged in, well, multiple businesses, including defense as well. I'm talking about Dynamatic Tech. They have undertaken this, move to demerge their businesses. But it's a pocket that's long been waiting for serious order inflow to come in. Despite this whole promise of defense and make in India, so on and so forth, it hasn't really found the wings. Anything that you think could work in this space? I mean, have you looked at defense very actively at all?
So, there are two parts to defense. One is the strategic kind of platform-based technologies like submarines, tanks, aircrafts, and so on, which is where the thing hasn't moved at all and is not likely to move at least any time in the next 2-3 years. And we have a few companies which have been waiting for forever to get orders on that. In particular, Larsen and, for example, Reliance Defense. They have got some. Reliance Defense, of course, has got some business from Rafael, etc. But the big orders are always a problem. The real issue, the ones that are on a consumable basis, are the ones that do well, where the armaments get consumed or explosives get consumed. So among the smaller companies, for example, Premier Explosives has done reasonably well, both as a stock as well as a company in terms of its performance. I think you will find that if the missile company were to get listed, which is what is on the plan, that is something that will certainly be interesting. And among the usual PSUs, I think BEL continues to look fairly interesting, though they've had a bad quarter. I think going forward, the missile orders will have to come back, and you'll probably see again another burst of investment spending there. So the real question is that can you get into the consumable side of the defense, and otherwise you'll have to wait for a longer time to get the strategic business as and when it comes.
Okay. Anand, we'll leave it at that. Thank you so much, though, for taking the time out and speaking with us today. Always appreciate your time. Have a great weekend.
Thank you.
That's Anand Tandon with his thoughts. But speaking of companies which have come out with some announcement, Dynamatic Technologies. Remember, we had a chat just 3 days back. You would wonder why we've gotten them again. But now the demerger is official. So let's just speak to the management. Remember, Udin Malhotra, when he spoke to him the last time, said that whatever action is taken will be beneficial for all kinds of shareholders, including minority shareholders. Let's try and figure out what's exactly happened and what the way ahead could be like. Udin, good speaking to you again. I know we just spoke about 2 or 3 days back, but good having you again. Now tell us, as I see, please explain this demerger to us. You have undertaken to execute the following plan. There is an auto division, aluminum factory, and a foundry, and a wind farm property, which will all get demerged into what? JKM Erla Automotive Limited? Is my understanding correct?
No. It's actually, as I mentioned to you last time, we have very fine assets. So regardless of whether they earn a lot of money, earn a little money, or lose money, the asset quality is very good. So what we're doing is we've taken the foundry, aluminum foundry and machine shop, which are co-located right next to Hyundai Motor in Chennai at Irangattu and we're going to be divesting of them completely. Now, just to give you a background, these assets are very nice, but they lose us 1 crore a month at EBITDA level, which means at net profit level, they probably lose us twice as much, with 6 crores of interest and 6 crores of depreciation. So by divesting of them and then divesting of the wind farm that feeds these facilities electricity in Coimbatore, we could actually monetize about 120 crores of cash, which, we don't have obligations to repay debt for the next 2 years, but we could actually put it back to the banks, prepay a significant amount of money, and also at the operating level, this would increase our operating margins, EBITDA margins, by about 10, 11 crores a year, double that at PBT level. But that's just the first part. The second part is, then we are left with 2 foundries. We have another foundry in Gummidipundi in the north of Chennai, and we have our foundry in Germany. I had mentioned to you on the last call that the German foundry, we have opportunities to also grow that into aerospace. So we don't look at these foundries purely as automotive assets. They are metallurgy businesses which can have a face towards automotive, a face towards all the other stuff we do, which is the hydraulics, off-road vehicles, and a face towards aeronautics as well, which we're hoping to develop during this current year. Now, what we are planning to do in the second part of the demerge or divestiture plan is to ensure that the Chennai foundry and the German foundry, 100% of these ownerships go into JKM Erla Automotive, which is a wholly owned subsidiary of Dynamatic, which will allow us some future thinking And for that, we really wanted to defer any further debate on that from the board to actually, we have middle of this year an AGM. We would like to hear from our shareholders. And, whether they like us to, we'd have got rid of all the loss-making business. This business makes money, and we have the other two businesses which make money. What would the shareholders like? Would they like it to be, after having carved out the loss-making companies and businesses and having reduced debt, would they prefer us to go further and mirror shareholding between these entities, or just hold it together?
No,
I'm agnostic, so.
Sure, I get your point, and which is probably a prudent thing to do, take shareholders' approval, but just wanting to get clarification, I'm still not completely sure. So you've taken one part, which is divestment. What happens to these two foundries? They go into JKM Erla, yes, but JKM Erla will rest within what? The automotive division or within the, the other business?
Well, JKM Erla will become a purely a metallurgy business. We have a brand called Dynametal, so it's possible that these will be then designated Dynametal.
Okay.
And if our shareholders would prefer to own Dynamatic Technologies, which owns aerospace, hydraulics, and Dynametal, or would they prefer us to mirror shareholding with Dynametal on one side and the aerospace and hydraulics on the other side? We will listen to that. But what we're doing is we're literally creating a set of stamps that are put together with holes in them, and if the shareholders want, we can rip them apart and mirror them.
So there could be potentially
the conditions.
Yeah, no, which is fair, but there could be potentially
done two steps. Yeah,
there could be potentially two companies ahead. One would be
potentially two companies, potentially one company. What we'd like to do is, as I mentioned,
leave it to the shareholders.
I'm a 51% shareholder. I wouldn't want to vote on this. I'd like to hear from all the shareholders outside of me. I'm agnostic.
Okay, but growth rates, okay, let's work with an assumption that the shareholders do vote that let's have two separate entities, because it's just better from a valuation exercise that you value the hydraulics and the aeronautics business separately and the foundry business separately, if I can loosely put that term. How would the growth rates for each of these businesses shape up with an assumption that they get split into two separate businesses?
So I'd challenge that assumption, because when we just did a temperature check, one of the very important points about keeping them together, a big driver for that, is the scale. If we were to split off just the aerospace and hydraulics business, where we've also been nurturing a defense. So our aerospace business is entirely global. So we export 90% of what we do, and it's a global aerostructures business. But within that, we also are partnering Israel Aircraft Industries for UAV production in India. We're working with Magal for making, securing perimeters, and we have some other places on the board for defense. And as a smaller 600 crore entity, we may be then not qualified to go in for some of the Make in India projects. So, what as a combined entity, you have no business that will be losing money. All of them are making money. The question is, I think, for shareholders to have a very knowledgeable conversation before I were to give you an answer, because if they choose to stay together because they'd rather be addressing the defense opportunities that we've been waiting patiently for the last 4 years, and keep it together, I wouldn't want to speculate on whether it's broken up. We've already carved out what we don't need.
So, Udyan, so essentially, while
there's a pro and a con.
I agree. Yeah. So and let's not try to preempt what is an imponderable right now. We'll get to know when we get to know about it. But just a simple thing, you had done this board meeting for demerger of the auto division. What you've essentially gone ahead and done is divest out the auto division, and there is every possibility that Dynamatic Technologies, the listed entity, will still remain just one listed entity without there being a mirror shareholding into another listed entity as well. That's a possibility.
Okay, so I would just extend that idea. What the board was examining was demerging our auto entities. What we've decided as a board to do is to go ahead and divest clearly the pure automotive and aluminum foundry that produces products for automotive, and the wind farm that supports that. So divest it, no mirrored shareholding. What is left, the metallurgy businesses, the two foundries, which have automotive faces but also serve the truck and tractor and bulldozer industry, and in future also aerospace, that's still within the company, but that is being put into a box which will allow a conversation with our shareholders to determine whether they'd like two companies or one.
Okay.
So we've created the conditions precedent for that, but with no idea that we would influence it. We would rather like to listen to our shareholders.
Okay, one last question, Udayant. We just had a guest before you. We asked him about what is his view on defense businesses. He's a very well-known investor stroke analyst. And the question mark always is that defense businesses are highly unpredictable, especially if you're catering to the domestic market. You're not necessarily doing that. My question to you is, with an assumption that it remains a single entity, and let's not, as I said, think of the imponderable right now. Let's assume Dynamatic Technologies in the current shape and form. Over the next 12 months, what's the kind of business growth that you foresee for this remaining entity? Let's assume that the divested entities are out and we are now working with the remaining Dynamatic Technologies, which also has the two foundries. What's the kind of business growth that you envisage in FY19?
Okay, so I would, firstly, I'd imagine the German foundry to remain flat, because this year ahead, where our focus there will be to add aeronautics certification to our existing certification. So in Germany, we make complex turbocharger castings. This is actually a twin scroll turbocharger that we have now produced in Chennai, where I'm sitting. We also export to Germany exhaust manifolds for BMW. We produce products for Daimler. But what's very interesting is the business here, the Chennai foundry, has seen a nice rise in products which go into braking systems. And these are all global braking players, like Wabco and Chassis Brake International, Mando, where the volumes are rising very significantly. The auto and the aerospace and hydraulics businesses are also growing very well. So what we're doing is, by divesting, we're becoming a smaller business, slightly smaller, and then we're growing again in the immediate year ahead on the wind that we have in these three businesses.
Okay. Well, it's been lovely chatting with you.
So just to give an idea, just these braking parts are giving us like 400-500 tons extra per month. These are new orders, they're doing well. It's an extension of our existing orders. The volumes are coming in. It's like our aerospace business. As you continue to supply high quality, your customer starts taking greater and greater volumes. So I think the wind is clearly in our sales with what we've retained. And I think this was what was discussed at the board. And the board decided to take what they thought, we as a board thought, was very prudent, which was axe what is bad, keep what is good, and then in terms of business definition, leave it to shareholders to weigh in and tell us what they think.
Great. We do hope shareholders take the decision which is best for the company. Thank you so much, Udayant, for joining us and putting all of that into perspective.
Thank you very much. As always, thank you.
That's Dynamatic Technologies. So not a demerger, really. Divestment of the assets, automotive assets, yields them about 120 crores. They may use that money to pay off some short-term debt. I know Jay Bala and Kunal Saragi are waiting by patiently, but it's about time that we take a break. Once we come back from the break, full tilt towards some of the other stocks that are moving around, though must say there's not too much moving around today. It's been largely a flat market. Come back and take stock of the last half an hour of trade.
Life's so lovely, live life happily. Oh, the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Welcome back. This is Countdown on Bloomberg Quint. Let's go across to Yash Upadhyay, who's standing by to give us the fabulous 4 stocks of the day. Yash, over to you.
Well, thanks for that, Agam. So first of all, we have Dalmia Bharat. Now this one is up about 4.5% today after CLSA came out with a report initiating coverage on it. Now they have assigned a buy rating and have set a target price of 3,500 rupees, which indicates a return potential of almost 33% from its previous day's close. Now they believe that the company is poised for a strong growth going forward, supported by a series of acquisitions, while they also expect their EBITDA and EPS to grow at a compounded annual growth rate of 16% and 50% over FY18 to FY20. Supreme Infra is locked in an upper circuit of 10% today after the company said that the consortium of lenders led by SBI has cancelled the S4A plan and are in fact exploring for other options under the debt restructuring plans guidelines issued by RBI. Also, Ashoka Buildcon had gained close to 8% today. A couple of key developments there. First of all, it has bagged an order in a joint venture with MAIF Investment for the operation and maintenance of 9 highways. The EPC contract's value for the first 2 years is estimated to be 1,000 crore rupees. Also, they have received another order for almost 860 crore rupees for the 6th laning of a highway in Jharkhand. And finally, we are also looking at Future Lifestyles. This one is up about 5%. It had been gaining for the last 6 trading sessions and is up almost 16% in that period, with volumes coming in significantly higher at almost 15 times the 20-day average. Back to you guys.
Thanks for that, Yash. Of course, plenty of stocks out there that we can keep an eye on. But I do want to go back to Jay. Jay, I also wanted your view on the banking space, that is the banking index, the Nifty Bank. What levels are you keeping in mind and what do you think is going to happen in the near term with respect to this one?
Yeah, the Bank Nifty is bouncing off very important support, and the last week's low of 24,700 is very close to the important support at 24,600. So I think if that were to given, I think we are looking at another 1,000-point drop for the banking index. The next support comes in at about 23,600. So this space is a bit of an avoid. And if you got to be there, you got to be in the private sector, not in the public sector. But if you got to have exposure, which is a mandate in your fund, or if it's a necessity of some sort, you got to have a rupee neutral strategy on the PSB names. I think I'm positive on Bank of Baroda on a relative term compared to Punjab National Bank. So that's the way you play this sector. So it's not if you can be on cash and avoid the sector, that's the best strategy here.
Okay. Just looking at a few stocks that have started to inch up a little bit in the last few minutes of trade. Inox Wind, I think, features in that list. Just get that stock up on the screen. It's just shown a minor pickup in the last few minutes of trade. Actually, not a minor pickup, 10% higher. It's a strong pickup in the last few minutes of trade. Kunal Saraugi, it's not a stock that we talk about regularly, but showing a sharp move upwards. Have you looked at Inox Wind recently?
Well, Dheeraj, we've seen such flashes of brilliance in this in the past as well. So I will need more proof before we actually go out and buy the stock. It's been a serial underperformer, remember. So till the time it doesn't break above 155, 160, I won't really go out and put money on it. But at the moment, yes, it definitely looks like something is cooking here. And I think the stock can very well get to 155. But that is the real test, whether or not it breaks past those levels.
Right, that's the Inox Wind, and it's, as a matter of fact, the top gainer on the Nifty 500 now with that 10% move. The next one in line is IDBI Bank. Kunal, coming back to you on IDBI Bank, how are you viewing trade now, considering the strength that we've seen in the past few days?
Well, I think there's definitely something going on, and we've seen very sustained buying interest here. The volumes are simply very impressive. Even today, we see a lot of activity in the F&O segment. I see the stock getting to 85, 86 levels very quickly. But again, it's going to run into very stiff resistances around those levels. So 85, I think, can be a fair target in the near term. One should put a stop loss, a trailing stop loss at 78 and continue to ride the momentum here. 85, I think, is the next port of call for this one.
Right. Well, IDBI Bank has gained 8 out of the last 9 sessions, and it has been quite a ride for this bank. And it's also moving contrary to some of its other peers. But Jay, coming back to you, to take stock of some of the two-wheelers, do you have a view on something like a Bajaj Auto or a Hero MotoCorp? And if you could tell us how you would play these names right now.
Perfect. And a very important question too. The two-wheelers and three-wheelers are showing very good signs of money flowing into it, and they have come to very important support. So in the next 2-3 days, if we were to see something like Hero MotoCorp or M&M start showing some firepower, I think that's going to be very positive for the overall market. but they are at a very important support, and it's quite possible. I mean, in fact, before I chose my pick this morning, I was tossing between Hero Motors and Mahindra and the other two stocks that I mentioned. So I'm looking at these names positively, but I'm having a a little bit positively cautious stance. I want them to pick up some steam. If they were to do that, I think that'll be very positive for the overall market.
Okay, Jay, now before we thank you, leave us with one positional idea, and if you have any short-term closing strategy, something that people can initiate a trade today, carry into the long weekend for Monday.
No, I'm very positive on IT sector, and even now, last week it was nucleus, today it's NIT Tech, and you pick anything out here, anything that's doing pretty well, you're going to do definitely positively, and you're going to deliver positive returns. And yes, NIT Tech is probably a consensus buy today, sell tomorrow, so which is probably Monday. So but you can pick any stock within the IT space, within the frontline name or the CNX IT index. They are definitely bound to do well even on Monday.
Fair enough, Jay. Thanks a lot for joining us and giving us your views as well as possible trades that can be taken up by investors as well as traders in the markets. Thanks for joining us. But we will welcome another expert. We have Mayuresh Joshi, fund manager at Angel Broking, also joining us right now. Mayuresh, good afternoon and thanks for joining us. We have been talking about the cement sector quite a bit over the past few days, but we've had a lot of strength come in, something like a Dalmia Bharat now. This is, of course, to a certain extent on account of some brokerage notes which have already also come in. But do you have a view on this particular stock? And if not, is there anything else that stands out for you in the sector?
Afternoon, Argam. Not to a large bit, I think what Dalmia has done with the expanded capacities at 25 MT, more or less operating out of the south and east, and with the slew of mergers and acquisitions that it has been doing. Obviously, I think FY19 is going to be a slow and steady phase as they probably consolidate everything that is probably going around in terms of their mergers at this point of time. Having said that, I think the EBITDA per ton should show a steady improvement going forward. And as volume growth picks up meaningfully, my own sense is that the EBITDA and the earnings growth should be far more better. Again, I think the news that we've probably been hearing in terms of the assets of Binani, again, if that probably does get taken over, again, the FY19 number might look a little bit subdued in terms of the net debt levels probably going up. But again, that gets compensated, as I said, with very strong volume growth and leverage. Because cement as a theme is something that we are continuing to like, and though input costs have probably moved up, I think the realization passed through in a partial manner will offset the kind of hit that one expects on the EBITDA front. So clear disclaimer, we own this stock in our portfolio, remain positive on this one. But the other two names that I also probably like and which I've discussed in the past are JK Cement and Ramco Cement from the Cement Bank.
Mayuresh, today there is some wind in the sail for Inox Wind. Do you track the wind power space fundamentally?
No, again, Neeraj, I think here again, I think the renewable space looks a little bit more in terms of the entire supply demand dynamics. I think the government is all gung-ho in terms of solar renewables. As far as the wind renewables are concerned, I think the realizations that can accrue to these companies, I think that's a very important factor to probably determine how the entire balance sheet dynamics will pan out. And that itself becomes a little bit of a tricky perspective to probably factor in your estimates. Having said that, my own sense is that India Energy Exchange is something that I'll still continue to prefer on declines. Its dominant positioning in terms of trading of energy, what you've probably seen in terms of short-term trading is still around 10%, but the company and the management is very, very hopeful of increasing the market share in terms of the overall pie going up. The second element in terms of the dominant position is clearly reflected in terms of the rates that they probably charge. And the third aspect also becomes the clear leverage on the operating front that this company can derive. So you have to indirectly play the power story through the renewable side as well. I think India Energy Exchange is something that looks promising, but in a staggered manner on declines by long-term investors.
Sure. Mayuresh, the other sector that is actually picking up pace right now over the past few days is the capital goods space. At least, of course, today we have a little bit of surge coming in Thermax. But on the whole, in general, what opportunities are you seeing, if at all, in the capital goods and power goods sector?
So again, I'll be very, very selective here, but what you're probably looking in terms of trends, my own sense is that order flows should start picking up. I think a lot of management, including Thermax management, was very, very hopeful in terms of orders picking up in a gradual process. But again, I think that should meaningfully add to the revenue visibility for a lot of these companies. Having said that, I think the contrarian call that I probably got at this point of time is BHEL. The order book in terms of the executable visibility on the books is close to 82,000 crores. And if I compare the kind of order wins that one really expects to come through, and even if one eliminates the slow moving orders or orders which will not probably get into their books, I think it still has a very sufficient book to bill ratio. Having said that, again, I think the margins are probably on the upswing and probably on the mend. And that probably gives me some bit of confidence that the worst might actually be over and behind BHEL. So again, any decline becomes a good opportunity in my opinion. And the second in corollary to BHEL would be power mech projects. The stock has moved up significantly. But in my opinion, again, the order book that the management is looking at in terms of a backlog of 4,500 odd crores gives it a 2.5 year revenue visibility. The second aspect in terms of more O&M orders coming through, which has a high margin share, as well as some contribution coming in from the non-power segment, actually augurs well. The third element also becomes when a lot of these contracts in terms of the existing power plants actually come up for upgradation, and what actually you've seen in terms of the oil refiners moving to the BS6 concept, there is a huge amount of tendering process that can actually take place. So my own sense is that the company can report an EPS of anywhere around 67, 68 odd rupees for FY19, which still gives it a very reasonable scope to have a reasonable appreciation even from the current levels.
Okay, Mayuresh, stay on. Kunal, stay on as well. So much more to talk about. But let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Gentlemen, both of you, good afternoon. Darshan, let's start off with you first.
Yeah, so one of the stocks that's been spoken about is Fortis Healthcare. The management has now indicated the fact that, they are suggesting an M&A that will happen. 3 to 4 suitors are already there. So, more than what's going on in the company, it's now this M&A that would potentially keep the stock afloat. So that's been spoken about in dealing room. So that's the first stock that's been spoken about. You can see that Moil is up almost is higher in trade. So there seems to be a lot of traction there. And tire stocks are something that dealers are talking about. There is something where I think a lot of selling is happening. So you can see the tire stocks. There is C8, MRF, and Apollo Tires. You can see Apollo Tires. It's surprising, despite the promoter accumulating every day, the counter seems to be rather weak. So these are the stocks that dealers are talking about. But Yatin, what are you hearing?
A couple of stocks to talk about, starting with ICICI Bank. That is one stock in the private banking space wherein we are looking at some selling which is happening at higher levels. In fact, on the basis of F&O trends, dealers do indicate, a BTST kind of a strategy. So ICICI Bank is one stock. Another one is Moil. And they have been increasing product prices and overall demand from the steel industry remains robust for manganese ore. Of course, since the buyback is on, dealers are expecting a small 5 to 7% trading upside on the back of the price hikes that the company has taken recently. So Moil from the trading side looks positive. And finally, Camlin Fine Sciences, that is one stock has been correcting for a while now, but dealers finally expect that there could be some trading gains as HNIs are buyers at low levels as far as this stock is concerned.
Okay, Yatin, thanks for bringing us those stocks which are in focus, at least as far as dealers are concerned. But, Yatin did point out ICICI Bank, which is down in trade today. There has been some amount of weakness, and especially in the last 1 hour trade, it's taken a little bit of a knock. Kunal, if I can come to you on ICICI Bank, what's going on out here, and what levels are you keeping an eye on if one were to take a trade on ICICI Bank?
Well, I think the very near-term trend remains bearish. There's no two ways about it. But it's got a support coming up at around 300. And if it were to break 300, I think then you would probably see a major sell-off here. But what remains to be seen is whether or not it actually gets past those levels. So there is this major support that's coming up for ICICI Bank. Too late to short it. So at the moment, I think one should just wait and watch on the sidelines. If it breaks 300, I think then will be an opportunity to go short again.
Right, Kunal. So in that case, what would you recommend for those who are looking to enter positions right now with something like a buy today, sell tomorrow in mind? Is there anything that stands out for you right now?
See, Adani Enterprises is one stock where one could go short at the current levels. I think it's got a pretty bearish structure and it's breaking down as we speak. It's now below 200. I see it getting to 195 in a hurry. 204 is where one should put a stop loss, and one can short Adani Enterprises at the current levels.
Okay, go short on Adani Enterprises at the current levels is the recommendation from Kunal Saraugi. I'm looking at this week's performance. It's been a bit of a comeback for autos. What's not done well this week arguably has to be ICICI Bank, 6.5 or 7% lower. Corporate-facing banks, by and large, Axis Bank too is down about 4 or 5% in this week gone by. Mayuresh, for somebody interested in buying or investing in a large-cap bank, what's that one standout recommendation that you would be comfortable with?
So out of the corporate-facing banks, I think ICICI Bank is still something that I'll continue to like. Yes, after all that we've seen with the PNB saga, the new NPA norms, the elevated provisioning can very well continue for corporate-facing banks. But what the bank has done over the past is that the retail advances have grown at a much faster clip. In terms of the recognition, both on their watch list as well as the RBI divergence, I think the bank has proactively pushed through both the recognized asset quality issues as well as recognized the excessive provisioning that is required. The third element also becomes the leverage that the bank has and the capital adequacy, which remains very, very strong, which can fuel the balance sheet growth. And the pointers that we're trying to bring about, I think the credit growth from the PSU side is still clearly going to struggle over the next few weeks and months. And that gives an added legroom and advantage to a lot of these private banks to probably push through the retail advances as well as a few of the high qualitative corporate advances with good ratings through. So in that sense, again, I think though credit costs might remain high over the next 2 to 3 quarters, they should start tapering down. And again, from a valuation perspective, I think it's pretty attractive. So yes, any decline, ICICI Bank remains one of our preferred picks within the corporate private banking space.
Right, Mayuresh, you also have a view on CCL products, and I believe that you like and you prefer this pick. Can you take us through the reasons behind this one?
Absolutely. I think if you look at CCL products, the global market share in terms of the instant coffee that it makes it 6.5%. The Indian share that it has got is close to 24%. In terms of capacities, it's got a 35,000 TPA capacity, which is split 20,000 in India and 15,000 in Vietnam. Now, a large element in terms of their Indian operations are running at 90+ utilization levels. So the management deems fit to expand this capacity by 5,000 TPA. And what this extended capacity will do is it will make premium dried freeze coffee, which is very much in demand by clients both out of Japan as well as the European region. In terms of the cost plus aspect, I think the company does work on a cost plus model, which means that it orders green coffee as soon as it gets a bulk order for the instant coffee. So in that sense, I think the input costs are to a certain extent, even if they get inflated, are safeguarded through a push through, which helps the company maintain margins at 20%. The capacity at Vietnam is strategically located, and I think the kind of exports that it does, both to the US markets and the Chinese markets, is very, very phenomenal. Having said that, I think with the capex plans and what the capex that it has done, I think the cash flows are still maintained around 80 to 90 odd crores, and the debt equity stands at 0.2, which gives it return ratios in excess of 20 odd percent. So I think it's a very strong earnings story as well as a strong balance sheet story, which should sustain over the next few years. So any decline onto this counter, in my opinion, becomes a very good buying opportunity for long-term investors.
Okay, Mayuresh, any thoughts on Astral Poly? It's been a stock that's done extremely well this week.
It's been an amazing story, Neeraj, and if you look at the past history on how the company has evolved, I think it's a case study within itself. What it's trying to do in terms of innovations and trying to protect the kind of revenue, EBIT and bottom line growth that it has probably achieved over the past few years amidst competition and amidst new innovations that are taking place. I think the company is right up to the mark. The only concern that the street as well as a lot of analysts have is the kind of valuations that it derives. And specifically in terms of any future projections that you've got, any disappointment in terms of a double-digit growth, both on top line and EBITDA, might actually have a negative reaction onto the stock. So apart from valuations, I think the story is here to stay over the longer period of time. So I think the recommendation, at least at this point, is for investors holding onto the stock at lower levels to keep on holding the stock.
Fair enough. Kunal, coming back to you, we've been seeing some traction in a lot of these mid-cap IT companies, and NIT Technologies stands out in today's day of trade. Do you view anything at all, and would you go long even at these levels?
Absolutely. I at the start of the show, I recommended NIT Tech, and I think there is definitely more room on the upside. It's got a tremendous chart structure. We've seen a correction, and now there's a fresh breakout. 920, 925, I think, is going to happen in the short term. And once it crosses that, the stock is probably geared to actually get past 1,000 and will soon trade in 4 digits. So I think definitely a tremendous stock to own. One should put a stop loss at 840 and go long if you're a short-term trader. 920, I think, is gettable in the short term.
Okay, stocks at 52-week highs include Godrej Agrovet. That is one company that's doing rather well for itself. First Source continues to rise and shine. So that's another stock that's done very well. Actually, this week, First Source, this month, First Source has, last 1 month, First Source has had a phenomenal run. Kunal Saraugi, First Source, 30% in the month gone by. Is there more in store?
For sure, Neeraj. I think the stock broke from a very major consolidation around 45 levels. It struggled around these levels for a very long period of time and finally managed a very emphatic breakout in the previous month. I am quite confident the stock should get to at least 60-65 levels going forward. So there's plenty room on the upside. I think 20% upside in the next 3 to 6 months is possible. One should definitely be long on First Source.
Okay. Mayuresh, First Source, any thoughts?
No, I'll rather play CSC, Neeraj. And again, I think the kind of story that CSC will probably command over the next few quarters and years is going to be phenomenal, both through the generation part of its business. Again, First Source being a part of the parent company and what we've probably seen in terms of their bullet repayments is a very encouraging sign. But again, I think the different aspects that one talks about, Spencer has done well, at least on the EBITDA front, and with a constrained level of additions, at least on store space, the SSG growth should be quite reasonable. The ROE, both in terms of its generating and transmitting assets, should be in excess of 17%, and that itself stands out to be a very important facet for the company. So yes, I think First Source, in terms of what it is doing financially, does help the company stand out in terms of performance, but CSC is something that I'll still continue to prefer over a longer period of time.
Okay, gentlemen, stay on. Final thoughts, actually market wrap before we get back in final thoughts. A minute and a half left. Very quickly, bring up the benchmark indices. The heat map will essentially show you how the large caps have done too. I must say we've cracked a bit in the last 45 minutes of trade, come off quite rapidly, and therefore the quantum of red has increased. ICICI Bank, one big loser for the week as well. It's actually had some serious cuts. SBI has come off quite rapidly as well. Yes Bank. So banks by and large down. HDFC Bank contributing. I think if you look at the contributors list, you will see that too. And amongst the gaining side, maybe BPCL. Of course, India is irrelevant, to be honest. Eicher Motors slightly higher, but must say the quantum of green has reduced quite considerably. And just get the contributors list before we move to the mid caps and the small caps, and you will see banks contributing in a meaningful way. ICICI, HDFC, and then Infosys and Reliance amongst the heavyweights. But it's the banking names which have put a lot of pressure. Out of the 61 points, Almost 22 belong to these two banking names, and not enough gainers on the other side, I think, which is why you have this skew. The market bet would have worsened a little bit in the last few minutes of trade. So this, okay, yeah, look at this. Last 45 minutes, we have a yawning gap wherein the declines have considerably advanced compared to the advances. Agam, what about the mid caps? I'm guessing this shows what's happened in the broader markets too.
Absolutely, and you know, I'm going to start with some gainers, and we have IDBI Bank right at the top, as a matter of fact, gaining quite substantially. So there you have it, up as much as nearly 8%. You know, among other gainers, we have something like a Dalmia Bharat, which is also gained. This is largely on account of the CLSA initiation that we have on the stock. GE, that's a transmission and distribution, that is also up as much as 3%. We have Colgate Palmolive, which is doing well in today's day of trade. That's up and about. And on the losing end, I do want to address Indian Bank. Now, that's one stock which is on the losing end. And of course, along with the several other public sector banks which have seen so much weakness, Indian Bank is just extending its weakness as well. Reliance Infra stands out in today's day of trade. And Rajesh Exports is the other stock which has seen some amount of weakness right now, followed by something like an Endurance Technologies. So Endurance Technologies most likely looking at some amount of profit taking in the final hour of trade. So those are some of the mid caps that I'm watching out in today's day.
Yeah, and it was actually doing rather well for most part of the trading day. Must bring up Vakrangi before we do what. Okay, fine. Let's talk about how the week gone by has been like, and the Nifty return has been about 1.5% quarter off, led predominantly, as I said, by the banking names. So ICICI Bank, Axis Bank out here, State Bank of India about 4.5% lower. So banks haven't had a pretty week. Hindalco, Vedanta are amongst the others. I was asking Nikki about what could the reason be. I mean, she was talking about how commodities have come off a little bit on the global exchanges. Maybe that's led to these stocks coming off. And Abuja, because of the demerger, called off, down about 4% for the week. Gainers include Eicher Motors, somewhere Hero Motocorp. Yes, Hero Motocorp. So some bit of gains to select auto names. But yeah, that's about it. And I think the saga has continued for two stocks. I just want to bring up today's returns or this week's returns for both PNB and Vakrangi, and you will see that it's not been a happy hunting ground for both of them for the day or for the week. The last 4 days they have been under the eye of a storm and not improving at all. So not the best. Okay, this is Vakrangi over the last, well, yeah, this is 5 days, but yeah, you can see almost all the days it's been locked on a lower circuit, so that's not really had a happy hunting ground. Today's session 2 ending about 5% lower. But this brings us to the end of the day and the week. Final thoughts from both our experts as well. Kunal Saraugi, to you first. The last 45 minutes looking a bit disturbing from a trade perspective. What do you think happens come next week? Do we take on the weakness next week?
Well, I think so, Neeraj. Given that we are trading close to the upper end of the range, there is a fair possibility that the markets might slide to the lower end of the range now, and 10,350 I think is where we are headed. But it's very unpredictable in a range mostly, so one should be very cautious and have stop losses in place. Stop loss for a person with a short position, I think should be in the region of 10,600. I think 10,350 is where we are going.
Okay, well, thanks for that, Kunal. Thanks for joining us and bringing us your views as well to this show. We will keep tracking, some of those factors that you mentioned. But Mayuresh, before we close this segment, I want your short-term view on the broader markets too. How are you seeing trade, and how are you seeing traders position themselves in this market?
I think the markets are going to probably just dwindle down and consolidate. And wait for triggers. Now, what the trigger will be is going to be the starting point starting April in terms of Q4 numbers. And to that bit, again, I think what you're probably seeing in terms of a lot of stocks which had moved up, profit booking taking place, selective buying happening. But again, what we've also seen transpire for the PNB saga has rubbed off sentiments in a negative way for the banking industry as a whole. The IT sector has moved up significantly. And the other sectors probably are going to move up in their own sweet way because of valuations. So FMCG, staples have been at the higher end of the band as far as valuations are concerned. So unless you see meaningful numbers outbeating what the estimates are for Q4, I think a substantial move even on that front is not something that I look forward for. So again, I think a dwindling down effect in terms of market, a very slow and painful time correction, if I may call it that way, over the next few weeks. But if numbers are a testimony to a revival for the markets, I think one really will wait out for the Q4 results. So I think next few weeks is going to be a consolidation phase for the markets. It's going to be more stock picking rather than playing on the index, in my opinion.
Fair enough, Mayuresh. We'll let you go on that one. Thanks for joining us and giving us your views. Have a happy weekend and a happy Holi as well. With that, we'll slip into a short break, but don't go anywhere. We'll be back in just a bit. So stay tuned in the Bloomberg Quint.
आइसक्रीम ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels. And our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated, selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months. Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint. Welcome back to Countdown right here on Bloomberg Quint. It's been a weak start to trade in the European markets as well, with the three key benchmark indices trading with cuts. Let's head across to Jan Potts, who joins us from the London studios. Jan, good morning.
Good morning from London. Much of Europe covered with snow this morning as Storm Emma brings plunging temperatures to the continent. Equity markets not much warmer today. Trading just opened in the red about 2 hours ago, and stocks so far only been heading lower. All of the continent's main markets selling off today. Germany's DAX off 1.4%. The CAC in France down 1%. They're two of the worst performers. But 18 out of 19 industry groups in the red today. Media stocks off 3%, the worst performing group on the Stoxx 600. That's as the world's biggest advertising company, WPP, cuts its profits outlook. Shares down more than 14% this morning. Only one sector in the green today, that's the food and drink sector, boosted by brewing giant AB InBev. Its shares up more than 5%, fueled by better than expected sales of Stella Artois and Corona beer. On the bond markets, treasuries climbing along with German bunds. The yield on 10-year US notes dropping 2 basis points towards 2.8%. Meanwhile, spot gold heading for its lowest close this year, and WTI crude oil looking set for its first advance in 3 days. That's as US data show that inventories and supplies both surged, amplifying investors' worries about a global glut. Back to you.
Well, thanks for that, Yuan. Thanks for joining in today. Hope you have a warm day ahead. Boy, is the weather in London fickle. We've seen enough evidence of it over the last 2 or 3 days, snowing and then suddenly sunlight over the next 5 minutes. Thanks for joining in, Yuan, today. Okay, I think a couple of very interesting discussions, one that we've had and one that we will have. Let's talk about the discussion that we've had already, and that's with the country's largest fund house and the manager, the CIO of the fund house, S. Narain. I caught up with him on the sidelines, or rather on the mutual fund show. And on the show, we spoke about his take on smaller mid-cap and small-cap stocks. If he sees a correction from the current premium valuations, and his take on some of the contra bets. Here's what he had to say on all of these.
I think clearly they've had such a fantastic run from 2013 September that I think the chance of a bigger drawdown in small and mid caps is very much there. Unlike large caps, where large caps there have been so many stocks which have gone nowhere in the last 3 to 5 years, whereas in mid caps almost all the stocks have gone up. So our view is that the risks in small and mid caps are much higher than the risk in large caps at this point of time.
Okay, what about the earnings growth coming back in a big way? Does that give a cushion? And the reason I asked this to you, Narain, is that in 2008, for example, both the P and the E were trading at peaks. This time around, the P has gone up, but the E hasn't.
Exactly.
What if the E makes a comeback?
So I think E makes a comeback is what I said is the reason why large caps is much safer.
Okay.
The reason is if you look at the sectors which have been responsible for poor E, bulk of them are large cap centric. So if you look at technology, they have not done well. If you look at financial services and banks, they haven't done well. And they're all a big constituent of the large cap benchmark rather than the mid and small cap benchmark, which is the reason we any day recommend large cap funds over small and mid-cap funds at this point of time.
Okay, a couple of market questions, Naren. You've made some very successful contra bets over the last 3 or 4 years. Two that I can think of at the top of my hat is your call on metals right at the beginning of the cycle. You guys were amongst the only ones to take a bet on telecom when it was being butchered down, and yeah, the returns have been good. What's the contra call that S. Naren is giving out right now, or thinking of right now, or enacting in his portfolio?
The sectors which we are pretty positive about at this point of time are clearly power utilities, and I would say upstream oil, and I would say we have been telling the world that people should invest in credit funds on the debt side. These are the calls that we like from a, let's say, a year point of view or things like that. From a long-term point of view, we have been positive on the export industries because rupee has been stable for the past 4 years, which has actually hurt the export industries. So sectors like technology and pharma, we certainly like with a 3 to 4 year view. But is it a 1 year view or a 3 year view? I would actually bet it's a 3 year view.
Okay, so where I can think you a contra then is pharma, because most people are still talking about biding their times and waiting for clearer signals. You are going out and taking that bet on pharma?
Yes.
Okay, reasons being?
Reasons being, if you look at it with 130 crore people, India itself is going to be a big market. And one of the normal things, if the way we look at it, is if there is a government policy which is coming and the market doesn't react to it. So there was a reasonably meaningful medical insurance scheme which was announced as part of the budget, which obviously would take time to operationalize, but it was a sector which didn't move. Normally on the whiff of a policy change, sectors go up substantially. So that's a sign that the sector has become value. When market doesn't respond to positive news in any sector, that is a sign of value for me, and which is why I like a long-term investment in pharma.
Interesting. One more theme, and I wanted your view here, is on this whole talk of betting on companies wherein capacity utilization would move up, economy linked or otherwise. Where are you here, and what pockets within there?
So we are positive on that. So we have had investments in sectors like cement. That way you look at it, the banking NPL problem is also like a capacity utilization problem, because for the past 7 years we've been discussing the same problem, and NPLs are like lower capacity utilization, and clearly over a 3 to 5 year period we think NPLs will go down as a percentage of loans. That is equal to increasing capacity utilization of the industry, and that could lead to clear benefits in that sector. But always in near term, people have been waiting for that bottom, and that bottom keeps getting delayed and newer problems keep coming. But over a 3 to 5 year problems, a 3 to 5 year period, these problems will go away.
You believe PSU banks could be a meaningful bet from a 5 year perspective?
Selectively, and corporate banks as such, people with good funding franchises, who have good processes and good technology, I think those corporate banks should do well over the next 3 to 5 years.
So that leaves PSU out. You're talking about private sector corporate lending.
There are public sector banks with good processes and good technology. It's just that I can't recommend all the public sector banks. All the public sector banks don't have good processes and good technology, but some of them have it, and those banks, and as such we are positive on corporate banks for the next 3 years. And I think if you look at it, where is blood on the street? Blood is on the street in corporate banks, and valuations are reasonable. So given that it's a sector where there is implied leverage, I would say we are positive on the sector, but you can't make 100% of your portfolio corporate banks because it's a leverage sector.
Well, that's S. Naren, and of course you can get a slice of this entire conversation on the Mutual Fund Show on our website. Let's now listen into the exclusive conversation we had with the management of Fortis Healthcare.
The accounts were signed. I think there was a lot of noise in the past about Deloitte not signing Q2, etc. We had delayed results for Q2 and Q3, but the results were signed. That's number one. Their concluding statement references the fact that there are 2 or 3 things that, in light of which, and the potential materiality of those 2 or 3 things, that because they don't know the impact of them, they cannot comment on the statements because of the potential impact. But having said that, they have signed the accounts, and I think that's an important statement, whereby we've been able to release our results. There is a company-initiated, a company-mandated investigation that's come through our audit committee that's been initiated. And in addition, as you're probably well aware, SEBI is also looking into the matter, and we believe that what the companies requested through the audit committee and SEBI, whatever investigation, whatever it might yield, we're certainly not only cooperative but very supportive of it, because we believe that anything we find which will help us become a better company and help us to do a better job is good for the organization, it's good for our patients, it's good for our employees, it's good for all of us. So I think where we are today is we look forward to the investigation being completed so we can close all the matters and move forward. We'll take it from there, and we go back to focusing on our patients, which is what we do every day.
Okay, good afternoon, Mr. Singh. This is Darshan here. Just one query I'll take out from where Harsha left. In terms of this 473 crores, which SEBI is also investigating. So as per the audit report, I believe close to 70 crores of partial repayment has happened. What happens to the balance? When can we expect that to come in? And what are the modes in which this will be refunded back to the company?
You're breaking up badly, and I couldn't hear the last part of it. I did hear the first part. As has been shared in the past, we are working on a repayment plan that's been committed to us by the end of Q1. And at this point, we have no reason to think that it won't come in. So we certainly believe that it should be coming to us by the end of June.
Okay, but why was this done so late? Because the companies that were lent to initially, they were not subsidiaries, but then they became subsidiaries of the company. So in that case, why was this reported so late? Why was this not taken up earlier?
So there is, as has been mentioned, there was a change in the shareholding pattern of these entities. At which point in December, they became related parties. I think beyond that, quite honestly, look, there are a couple of investigations going on. I think they'll yield all the facts. Not a whole lot more that I can comment on it. I can tell you that as a matter of process, companies all over the world, good companies, very good companies, blue chip companies, at different times lend money to different places from an interest perspective or what have you. We did the same thing. There's some issue that potentially has come up. We have an investigation. We look forward to getting to the bottom of it. And in addition, we look forward to a full repayment plan by the end of the first quarter.
Okay, I take your point. I just want one query. In terms of these companies, what is the financial backing? What are the major assets that these companies have that makes you confident that this money will come in? And since now that the Singh brothers are no longer promoters, will there be additional pressure put on them to get this repayment done?
Look, anytime any organization lends money, whether forget about organization. If I lend money to a friend, and if I, the first thing I say is, does this individual have the ability to pay it? So there's a testing that's done, there's a routine testing that's done, and by basis which these loans were given. Now, as far as the Singh brothers, quite honestly, it's a question you'll have to ask them with respect to where they are and what they're doing. The assurances given to us has been that the funds will come back, and again, as I just mentioned earlier, we certainly expect that to be the case. But anything from a Singh brother perspective, I think best to ask them those questions directly.
Okay, brace up for a scorching summer. The meteorological department has put out a warning today, predicting that the average temperature across the country will be higher by at least 1 degree. We caught up with the head of climate prediction at the IMD, Mr. D.S. Pai, to understand which parts of the country will be the worst affected. Listen in.
As per the forecast, we are expecting all the solutions from the country to experience above normal temperatures during these 3 months. That is the average temperature. And particularly, subdivisions from northwest India and the neighboring area. These are the generally we get the heat wave conditions during this period. They are expected to experience more than 1 degree abnormal temperature.
That is a wrap on this edition of Countdown. Up next is What Did You Miss? Stay tuned to Bloomberg Quint Live.
Nine to 5
5 job, अरे 5 to 9 job.